what I'm going to guarantee you right now is you do not need to know one thing about annuity products to be successful in the home. What you do need to know is concept. But guess what? The same thing applies on the life insurance side. You don't need to know which life insurance company you're going to represent if somebody's responding to a mortgage lead. You don't need to know what life insurance company you represent if somebody responds to a final expense lead. But you do need to understand how final expense and mortgage and annuities work. Does that make sense?
Yeah.
Does that really make sense?
Yes.
That's a little better. All right. So one thing I really like about Sean Mike is he and I, which I didn't know until I got here, we're very much in sync with the way I think business should be done. So rule number one is no matter what you do, it's got to be about not us. It's got to be about the client. The client has to come first. If you're not doing the right thing 110% of the time in the field, you probably shouldn't be in the business.
Yeah.
Because if you're not doing the right thing, what happens? No sale. Even worse might be chargebacks. And then if you're not writing enough business, now you're expected to come out of pocket to pay the insurance company back. We don't want to do that. But what Sean says, which I agree with 110%, is you got to do the right thing by the client first. If we are very consistent in doing that, we are afforded the opportunity to make as much money as we want to make. That's a pretty simple concept if you think about it. All I want to do is take care of as many clients as I can and do the right thing no matter what. Now, the right thing may be a $30 a month policy, but it's not going to charge back, so you don't have to worry about anything because you did the right thing. The right thing may be protecting their money through our safe money retirement system, which is annuities, but you have to be able to explain why annuities are good today versus how they weren't good 20 years ago. But if you do all the right things, you can be as profitable and as successful for you and your family and your future generations as you choose to be. And if we're doing these two things really well, then this brand is going to continue to explode like no company's ever seen. How many agents did we bring on board last year?
Last year?
Last year, 27 to 30,000 new agents came on board last year. Think about that. Do you know any other company that could say they increased their reps by that type of percentage in a 12-month period? There is nobody else out there doing that, and I know no one's doing it in this industry other than us. But you guys probably want to know how I'm able to close 98% of my annuities pretty much on the front end every time.
Yes.
Brandon, you know, you heard this already. But I'll do it again for you. How's that? All right. So one thing that I do is I tell all my agents that if I'm going to train you about product, that means I'm not going to talk about product. I'm going to talk concept. And when you think about what we're trying to do with annuities, really what we're trying to do is what the market was intending to do 50 years ago, but they're not doing anymore. The market wanted to give us the ability to grow our money, which we can do with annuities. It was intended to try to protect us, which it doesn't do anymore, but annuities do. They were going to be reasonable in what they charged us in fees. Has anybody met anyone that said, oh my God, I'm so happy with how much money I'm giving my broker? It's not out there. It doesn't happen. And then, hopefully, in a perfect world, maybe you'll have an income stream if you need it. But not everybody needs it. So when I'm in the home, just like people before me have talked about, I'm going to ask that question. Do you have anything that acts like life insurance, like a 401k or an IRA or something along those lines? And if they say yes, I'll ask how much and where is it? And then I just set it aside and now I go on with the rest of my lead appointment. So if I'm there for final expense or mortgage or whatever I'm there for, I'm going to finish that up. And then I'm going to circle back. And Brandon, I'm going to use you for this, okay? So you're my client right now. So Brandon, you mentioned to me that you got this old 401k from when you used to work for the state of Arizona, and you got about $200,000 in it, and you said it was at Fidelity, right?
Yes, sir.
Okay, well, don't call me sir. I appreciate that, but I'm not that much older than you. I don't care how much raise you. Okay, I appreciate that. And then what I literally do, and for those of you that want it, here's what we're going to do. I'm going to give you my phone number. You text me your name and your phone number, and I'll email you what I'm going to show you. Okay?
That's great.
But what I literally do, because I've already gone beyond having to use a form, is I whip out a blank piece of paper and I draw a T. So the only letter of the alphabet you need to know for annuities is T. Okay? On the left side, what I'm going to tell people is, okay, look, Brandon, you're at Fidelity right now, and I'm going to talk about what I do better than a lot of other people do and what our company does, which is we have what's called a safe money retirement system. And my writing is really, really bad, so take your notes based upon what I say. My wife and my dad think I should have been a doctor because of how good my writing isn't, but I'm here instead. All right? So the first thing I'm going to do is I want to sell Brandon or whoever's sitting in that chair the concept of why our safe money retirement system potentially is going to be better for them across all points than where they're at. So Brandon, you mentioned you're with Fidelity, so you understand you're in the market, right?
Yes.
So if you're in the market, what happens when the market goes up?
I make money.
You make money, but what happens when it goes down?
Oh, I lose money.
Painful, right? You had money in 2008 in the market, you lost about 40 cents on the dollar, right? Not fun. You understand, if the market goes down and you're in the market, you have zero control over how much you're going to lose, right? So what I'm going to tell them on this first point is you have 100% risk of loss. Is that a fair statement?
Yep.
Yes.
Now, I'm not sure if I can help you. I think I can. What did I just do there?
Took it away.
I took it away. Okay, I took it away. Everything I'm going to do is two things. Number one, take it away because I want them to want to know if I can help. And number two, I want to close on the front end so when I come back, I know I'm doing it now. Okay, that's my whole goal here. Sell a concept by taking away the what if and letting them know this is how we're going to do it when I come back. So with our safe money retirement system, we have options that are guaranteed to have no risk of loss, which means if the market goes down, the contract says you're not going to lose a single dime. If I'm able to find you a product or a company that can take the money you have at Fidelity, which is at 100% risk, and I can move it somewhere where you're guaranteed not to lose a number dime, would you be interested in taking a look?
Yes. Yes.
Yes. Now, if I were in the home, I'd be sitting right next to Brandon. I'm going to give Brandon my pen, and I'm going to say, do me a favor, let's just put a check mark right next to my side. That's your soft close, that check mark. Every step of the way with what I'm going to show you, when they put a check mark, they're already buying into doing business with you when you come back with that illustration.
How did you word that question one more time? If I could.
So if I can show you something that can take where you're at, which is at complete risk of loss,
Mm-hmm.
and show you something that might be able to give you no loss at all, guaranteed, would you be interested in taking a look?
Okay, got it.
Okay? Item number two. I know everybody that's in the market is going to pay fees. What people never know is what they're really paying in fees. What I do know is on average, Brandon and everybody else in the market is going to pay somewhere between 1.5% and 4% in fees. The only thing they're going to see is whatever fee is disclosed on their statement, but most people in the market, they use these things that we like to call mutual funds. Now, how many people are aware that mutual funds take fees off the top before they report earnings? Right? On average, about 2%. So if you're looking at a statement that says they're paying 1.5%, and they're all in mutual funds, what they're really paying is 3.5%. So I'm simply going to point out to Brandon that I know he's paying somewhere between A and B in fees, and when I review your statement so I can see how I can help you, soft close number two, when I review your statement so I can see if I can help you, I'm going to compare what you're paying in fees, and I'm going to actually look up and see what you're really paying. But I know that we have some products that have absolutely no fees for the life of the contract. And the worst one we have is a whopping 1.4%. So if I can limit your fees to 1.4% or even make them completely disappear versus what you're actually paying, knowing and unknowingly now, would you be interested in taking a look?
Yes.
Yes, do me a favor. Check mark number 2. As you're seeing this set up, ladies and gentlemen, do you think there's a possibility he's going to say, I want you to come back?
Yeah.
Okay? That's what the goal is. You're not going to run those illustrations in front of them because you might not understand your products yet, so you're going to need to reach out to somebody who can help you with that. So we've talked about market loss. We've talked about fees. One of the things that I do not know yet is whether or not Brandon needs to live off of this money when he stops working, or if he just wants to leave it as a legacy to his family, or if he needs both. So Brandon, are you going to need to live off of this, or do you not need to live off of it and you want to leave a legacy for your future generations, or would you like to try and do both if we can do that?
Try to do both.
Try to do both. Okay, so Brandon needs income, and he wants to protect for legacy purposes. So Brandon, what I can tell you is I know bar none without effect, every product that I'm going to come back with next week when we set that appointment can do both of those. So you'd like to see that, right?
Yes.
So I'm just going to say we can do both, and I'm going to get another check mark. Now part of that income, where you're at right now, Brandon, I know Fidelity, unless they put you into an annuity that's variable in the marketplace, because they're not going to do what I do, you can still lose money, but it can create income, but as you lose money, that income's going to go down. Does that sound like something fun or something you'd rather avoid?
Yes. I'm trying to avoid that.
You want to avoid that, okay? So when you're going through that, the income that's over here is variable based upon the market, and over here we can fix it and we can guarantee it. So if I can show you something that's going to be more guaranteed, will that work?
Lifetime variable. Yes, sir.
What's number 3?
Does that say lifetime variable?
This is lifetime and VAR for variable. Like I said, my writing is really, really good. Okay, so the last thing I'm going to talk about, which John Gavin did a really good job on, is he talked about the fluctuation in the market. He talked about that when the market goes up or down, you're going to have some problems. Here's the bigger issue, which I really want to hammer home, and John talked about it. When the market goes down and you're drawing income, you lose your money faster.
Mm-hmm.
Okay?
Absolutely.
The average person in the United States, if they don't properly protect their money, once they stop working and start drawing that which they've saved, is going back to work in 17 years. My father-in-law, city of Pittsburgh, retired the same year my youngest son was born, which is 1997. And 5 years ago, he said, I can't afford to pay the bills for your mother-in-law and me. I'm going back to work. At the age of 80, driving a bus in Pittsburgh. Now, I know that his 4 daughters collectively got together and said, this isn't good, and I agree. So we did things like pay off the house and make sure that he doesn't have to do that unless he wants to now versus have to. Okay? Our goal is to make it as comfortable as possible for our clients. So Brandon, if you don't make any changes, I know bar none, your money runs out. Fair enough? Makes sense? So if I can show you something that even if you outlive your principal once we move it for you, is still going to pay you something every single month so you know you can live, would that be interesting?
Definitely will be. I get back more than I put in.
There you go. So on this side, I'm going to say never runs out. And I'm going to add another check mark.
Gotcha.
Okay, so you're talking about 5 to 7 minutes after you've already closed the business you were there first to do, and you're soft closing every single one of these points. So the next thing I do is I say, Brandon, if we take a look at this recap, every single thing that I brought up, you said you're really interested in finding out if we can fix for you. So what we need to do now is I need you to go get your statements for me. When you come back, we're going to set an appointment for me to come back and show you some options. When I show you options, whichever one you pick, just like with life insurance where we need to get the approval of the carrier for them to insure you, with Safe Money Retirement, they've got this concept called suitability, which is really the exact same thing. But in that case, what we want them to do is say, yes, we're willing to take you as a client and accept your funds. Is that fair? So they're not gonna stick you with a needle. You're not going to go in the bathroom and pee in a cup, but you are going to have your driver's license available for me because that's how they verify you're a living, breathing person. Is that fair? Okay, do me a favor. Go grab your statements. Let me check my schedule so I can give you a couple options when you get back.
Already put it up on the phone, email it to you.
There you go. Yes, sir.
What was that line before right there?
This one right here?
Yeah.
Lifetime and then VAR for variable because your cash is going to vary depending on how much you have left in the market.
And the other side?
The other side is fixed.
When you're going for the soft close, giving them control of your pen, are you getting each check mark for all 5 steps? Like, so check 1, then present 2, then check 2?
Yes, sir.
Okay, perfect.
The concept behind getting the checks every step of the way is you're looking for a buy-in that the farther you go down this list, the more they're willing to do exactly that which I want them to do. Now, let's be clear. I don't care if I close business. Let's be clear again. I do care that I do the right thing for the client, 110% of the time. So hitting Hall of Fame in 6.5 months is a phenomenal, fun thing to do. Of course, I had Jack Yu kind of standing behind me going, keep going. Okay? Even while on vacation, I was running business to make sure this happened. Okay? So my 9 days in Pittsburgh was 8 days doing work and 1 day for Christmas. I'm okay with that because I got to help a whole lot of family members, plus other people that I know back there. But every step of the way is designed that they're buying in just a little bit deeper, okay? So if you think about somebody who plays baseball, they're up to the plate. Strike 1, they start to focus maybe a little bit more than before they had strike 1. Strike 2, they're going to focus a whole lot because they don't want strike 3. They don't want to have to go sit down. This is reverse psychology. Every one of these check marks is basically saying what you're doing right now most likely is bad for your future, but I need you to agree without me telling you what you're doing is not very well. I need you to agree that you need me to come out and fix this scenario for you so you're always going to have money when you need it. So when Brandon grabs his statements and comes back, one of the questions I'm going to ask him is very simple. How much money, Brandon, out of your $200,000 on a percentage basis are you willing to lose before it's too much? Are you willing to lose 10% of what's there? Most people are going to say 10% sounds not bad. But I want them to think in percentages. I don't want them to think dollars because I want to give them the dollar amount. So when Brandon says, yeah, I can lose 10%, and then I say, Brandon, that's $20,000 out of your 200. Are you cool losing 20,000? No. Now, I had a client I met with yesterday, $582,000 he's got in his IRA in the market at T-Row price. He's married. He's got 3 daughters, 2 of which are special need. And his wife said yes to moving her funds, which is about $125,000. He said no. I said, why not? And he says, well, I don't need the money. I'm a military veteran. I've got my guaranteed pension. So I respectfully said, look, what you're telling me is this money that you saved over your working career is not important enough for you to protect so that your wife and your 3 daughters, 2 of which are special needs, are going to need funds, could use. And he honestly said no. Not interested.
Wow.
Now, the next thing I heard was the wife kicking him under the table.
All
All right? And she said, can we have a minute? We walked out. And when we came back, she says, okay, I want to move 350 of it. So we took care of that for him. But that's rare that that's going to happen because if you walk somebody through this and you show the respect and the humility that they've already done a good job saving, I want to edify however much or not much has been saved. You've done a good job saving what you have. A lot of that is market driven. It's free money because the market's gone up in the last 10 years. Why not protect that free money so you don't lose it? This is what we're able to do for you here. So Brandon brought his statements. So Brandon, knowing you don't want to lose your money, are you more interested in getting back together sooner versus later, meaning in the next 2 or 3 days, or you don't want to wait a week?
Sooner than later.
Okay, so I've got time. Today's Thursday. I've got time Saturday morning around 10, or I can come back around 12:30. Which one feels better to you?
10 a.m.
10 a.m. Okay, we'll be back at 10. what we're going to do, remember, I'm going to research what you got so I can replace how it works with what exactly is it doing. And instead of how our system works, I'm going to replace it with a product that I think is a good model for you, and I'll show you exactly how it stacks up, A versus A, B versus B. When you tell me you like this side, it's going to take me about 10 minutes to do an application. I can do it right on my computer. I can actually do it on my phone. And all that's going to do is send your information to the company that I'll bring back. They get to decide if they want you as a client or not. It generally takes them about 3 days if everything's pretty clean. Is that fair? And remember, the only thing I need from you when I come back is that driver's license. Has anything I've said scared anybody?
No.
No. Now, if I could tell you, if you use that, you're probably 80% or more of the time, you're going to go back into the house and the driver's license is already going to be out sitting on the kitchen table for you. I'm telling you, that's what happens. I close 98% of these. And the two that say no, they always come back later and say, I should have listened to you the first time. So really, it's 100%. But I'm not bragging. What I'm telling you is, telling them this is how it works and this is how we can protect you if you're interested in looking. They're always interested in knowing because they know they're going to need the money. I don't know too many people at the age of 80 are happy to go back to work if they have to go back to work. So if I can do everything in my power to help them not lose, pay significantly less in fees, have an income with legacy protection, guaranteed lifetime income, that's a number they can bank on that's no different than a pension or Social Security. Knowing this will not go broke, but Social Security will. So you're replacing something that might not be there in 20 years. And that it will never run out no matter how long they're alive.
David, is there a probation period where they can't touch the money? It's locked?
Every company's a little bit different. They have surrender periods if you decide you want to get out of that product. But within those periods, you also have what's called a free withdrawal system. So these companies will allow you to take without fee 5 to 10% of your money back out if you need it, above and beyond anything else that you're doing.
What's the average period of time where they can't be drawing on their money? Isn't there annuities that you can start drawing on right away? Or?
Yeah, there are annuities you can draw right away. The ones that you draw on right away, generally speaking, are going to have the fees. But if you're willing to wait a little while for your money to grow, we can get those fees reduced.
Okay.
Okay. But let's say you're already taking an RMD, but you have something happen to your garage and you need to grab a quick 10 grand. And the only place you can get it is out of this annuity. If that 10 grand is less than whatever that percentage is for the free withdrawal, they can transfer that money to you in a matter of 72 hours.
You said typically 5 to 10% a year?
5 to 10%. Every company is going to be different. Some are 5, some are 10, and it just depends on the company. So that's one of the things that you're going to have to go over when you go back to replace this with exact information. Is you want to let them know if there's an emergency and you need your funds, you can take up to this percentage of your balance without any fees.
Is it taxable?
Depends on the type of product. So if this is a non-qualified or an after-tax account, legal rules are profits distribute first, so you'll pay tax on the profit portion, but if what you distribute is a combination of income and principal, only the income is taxed. If it's a retirement account that you're saying I need extra funds, you're going to pay tax on the distribution. If you're under 59 and a half, the federal government's going to penalize you 10% of the distribution because you're under 59 and a half. And if you live in California, which is unfortunate, I do, I can't wait to move, they charge you another 2.5% at the state level.
Oh, wow.
California is probably going to drop off into the ocean because they want to eliminate the real estate tax out there. So people that are spending $5,000 a year on property taxes are going to be spending 20 or 30. I don't know too many people that can stay.
The last thing, David, when they bring you that statement, when you said, what happens then? What are you doing with that statement?
I take the statement. I want the original. Now, I already know fully. It's kind of circular to the answer. I already know, even though they gave me a hard copy of the statement, they can go online and grab it. Okay? They're not going to think that. What they are going to think is, oh, I've got an appointment in 3 days. He's got my original statement. I'm going to be able to get it back. So grabbing the original statement actually gives them a very good reason to make sure they're there when you come back. Okay? They want their pieces of paper back, and I want to be able to show them what these pieces all are going to be and then show them the comparison. When I show them the comparison with live numbers, I actually do the exact same thing. So if I show them that you're at risk and this is not at risk and it's in our illustration, you agreed last time, do you agree now? Yes? Give me another check mark. I show them their fees are exactly 2.5. I'm showing an Athene Agility, for example, which is guaranteed no fees for the life of the contract. I get another check mark. So when I'm done showing them, they've got all the check marks, I can simply say, you're ready to do the app. I just need 10 minutes, I'll be gone. You can go take your daughter out to her soccer practice. And they're saying yes. Work also on posing your questions. I'll come back to you, I got one before you. Pose your questions so the only option they have is to give you a yes.
Yeah.
Don't ask a question where they're going to say no. Nobody wants to hear or give or receive a no, but everybody likes a yes answer. So you would agree with me that they're going to nod, they're going to say yes, you move on to your next point.
So, have you ever had anybody like hit you up on how the funds are guaranteed?
I have. I'm going to defer you to one of Sean Ruggiero's AMS podcasts on that, because it's actually a fairly complex answer that if you haven't gotten comfortable with how to market yourself for annuities, I don't think it's fair to bring that piece in, because there's a lot of technical in that. And some clients may ask that, and I'll honestly tell them it's really, really technical. If you want to know, you got to give me an extra half hour, because I'll tell you. But what you do need to know is the contract, which is governed by the state of California, state of Arizona, wherever you are, and the federal government guarantees every single one of these things. And I'll leave the illustration with them once I've done the app.
DIC.
Okay?
The illustration, do you, the statements, do you actually turn it to ask a specialist, or you just go to Athene straight and get an illustration?
Well, you can do either one of those. You could also do something like call me or call Julius or call somebody in your upline to do that as well. Ask a specialist, you can upload them, they'll get them back to you within 24 hours. But then what you need to be able to do is understand what you're reading. Because most of the statements from Athene, for example, are 18 to 21 pages. There's only about 10% of the statement you have to go over with the client. The rest of it's all their legal stuff. And I tell them, this is all your legal stuff. If you got a bad night's sleeping, pull this out. But the pieces that I need them to know, which are these 5, I'm going to walk them right through that and get them ready to just absolutely say, yes, I want to get the paperwork in. I want to know that Athene or Guggenheim or Legacy or wherever I'm going to move the money to, wherever I'm proposing it, I want them to be more concerned with, I want a yes answer, because I want to fix where I'm at. I don't want to lose what I have. Mr. Air.
What pages do you leave the illustration? Do you leave the whole thing, or it's like maybe 7 and 8?
I leave the whole thing. But what I actually do is everything I talk about in theory, I will go through the illustration with a highlighter and I'll highlight everything I'm going to talk about so they focus on whatever's got a color on it. The rest of it they can look at on their time. I want them to see that everything I've talked about is printed on somebody else's paper, because that brings the credence to what I'm trying to do. Okay? That's all I got.
Give
for
it up
that.
for David, guys. Do you see why he did $2.5 million since Christmas? We got some things we can learn from that man. So great job, David.